Good afternoon, everyone, and welcome to this latest webinar in our Feast of Ideas for Your ISA event. So this week we've had an emerging markets theme, and we're ending with a look at Vietnam, perhaps one of the most interesting and exciting of the smaller emerging markets. In a few moments, we'll be hearing from Dominic Scriven and Tao Ngo of the Dragon Capital, the manager of Vietnam Enterprise Investments. As a reminder, if you have questions, please put those in the box on the right of your screen, and we should get to those at the end. We have around 15 minutes or so reserved for those. So with that, I will pass over to Dominic.
Thank you very much, Thomas. Thank you to Kepler and all of the team, Trust Intelligence, and a very warm welcome to those of you attending this webinar today. I'm Dominic Scriven. I'm one of the founders of Dragon Capital back in 1994. I'm calling you. I'm beaming in from Wales, actually, but my home is in Saigon, where my colleague Tao is, and she's one of the team, the portfolio team running Veil, as we call it. Thank you for giving your Friday lunchtime to us. Much appreciated. So Vietnam, as Thomas said, why on earth would anyone in Britain, in the West, be interested or concerned by investing in Vietnam? Well, number one is size, of course. If Vietnam is 100 million people, so if it were in Europe, it would be the biggest country. Number two, it's slap in East Asia, so it's not in Europe, and it's been very successful. It's the most recent of the successful Asian dragons, the pattern of which we've seen over many decades, from Japan in the 1960s through Taiwan and Korea and Thailand and the rest of Southeast Asia. The market is a frontier market, so not even yet considered an emerging market, which means it has a number of logistical hurdles, and Tao can talk about some of those. But the investment case for Vietnam rests partly on its track record. So the stock market started in 2020. Started in 2000, 22 years ago, and has delivered a compound annual return of something like 10% a year, every year since then. That's a return that can't be matched by really any other market in the world. And that's a testament to the remarkable story of Vietnam, which is one of growth and stability. So let's look at this slide and talk a little bit about the growth drivers. First of all, and you may be familiar with this, of course, a very, very strong driver from foreign investment. There are a number of angles to this. Partly it's China plus one, partly it's cost, partly it's because Vietnam is in the Asian supply chain and people are reordering their supply chains. But see there, that number, $22 billion, that's over 5% of GDP. And FDI is over 5% of GDP every year in recent years in Vietnam, as long as I can remember. And that's about one of the highest in the world, if not the highest in the world, on a sustainable basis. And of course, given the size of the population, given the demographics, its essential youth, we've got a very rapidly growing middle class. So you can see there, 37, that's, between 35 and 40% of the country entering what we call the middle class between 2010 and 2020 and 2030. That's a big driver to consumption and the move to modern retail, modern trade. These levels of growth, of course, require consistent and persevering investment in infrastructure. That's 30 billion. So that's a very considerable boost to the construction sector. And of course, that allows the continuing growth in urbanization, which at 38% is still well below that of comparable countries. China, for example, is now, I believe, over 65% urbanized. Next slide, please. So those are four very strong drivers, and they've occurred due to, or in the background of, a great degree of political stability, and a considerable degree of economic stability, most notably in the last 10 years. The GFC, or the global crisis of 2009 and 10, was severe everywhere, and Vietnam was not spared. But since then, we've had a very robust approach on macroeconomic stability, control of prices, stability in the exchange rate, management of inflation. And you can see there in these four charts, high growth rates. GDP growth in Vietnam last year was 8%, very high. Malaysia was higher, actually, at 8.3 or 8.4, but Vietnam was probably the second fastest growing economy in anywhere in Asia. And this year we're expecting a slowdown, but still this year we're expecting growth of 6 to 6.5%. And you can see top right there, inflation reasonably managed. Inflation last year was 4. This year we think it might be 4.5%, but that is obviously well short of the higher degrees of inflation in Western economies. Solid growth in trade. Each of imports and exports is 100% of GDP. It's a vastly open economy, not without risks, of course, but shows that Vietnam remains competitive. And all of this against the backdrop of a currency that, despite the strength of the dollar last year, has managed to hold really very consistent over a long period of time. Next slide, please, Tao. So here's that FDI story. Some of you may have visited Vietnam, but if you haven't, it's slap bang next to China. And of course, southern China is where the Chinese miracle has occurred over the last 40, 50 years. And so what's happening is a combination of price pressures, of supply chain reordering, and most recently, of course, geopolitics is encouraging people to move or to shift the emphasis of their supply chains elsewhere. And Vietnam is, I would have to say, the principal beneficiary. Of course, we read about investment in India, and we read about investment in Indonesia. But really, Vietnam is very concentrated in its pickup, as you can see from the brands there, of major global manufacturers. And this is a trend that's been developing again over the last 10 years, and we expect it to. We hadn't anticipated the geopolitics, of course, but those are likely to keep this trend going for quite a bit longer. And I mentioned infrastructure. You can see down at the bottom there, and we have a 200 billion master plan that's going to the National Assembly, the Parliament, in May of this year. So GDP is $450 billion, and so 50% of GDP is being committed to infrastructure investments, and you can see where on that map. It's really mostly transportation infrastructure. So think ports, airports, roads, highways. That's really where it's expected to be. And in the north, of course, we have this particular relationship feeding into China. So, for example, on that top green blob there is Haiphong Port. It's a major port in the north of Vietnam. And from that port is the easiest way to access 300 million people in China. So we're not just talking about the growth of Vietnam as a manufacturing and trading center. It's also a throughput into a large part of the Chinese population. Next slide, please. So just drilling down a little, I arrived in Vietnam in 1992. There was a trade embargo with the, from the US, which meant that the World Bank and the IMF and the Asian Development Bank, none of these people were able to do anything other than purely humanitarian work in Vietnam. Incomes per capita, as calculated by the World Bank, were $227. A painfully low figure that still remains in my head. Move along, and given these this backdrop of stability and a very open set of economic policies, both open domestically and open internationally, and backed with the demographic drivers, you can see growth in incomes has continued. China in 2010 was at a GDP level of $4,500 per person. It's now 12,100. And Vietnam is, broadly speaking, heading the same way. I think this year's estimate is somewhere around $4,500 per capita. And of course, that marks wide discrepancies from the countryside, those people who are not yet urbanized, where incomes are lower, but probably more stable and based in agriculture. And then the urban economy, which is about the size of Malaysia. The rural economy is about the size of Thailand, the urban economy the size of Malaysia, and growing really very consistently. Those growth rates there are more like 10%, as you can see, in GDP per capita. So that's a train well in place. Thank you, Tao. And that's what this leads to. So the green there is what we call, well, it's actually a McKinsey, based on a McKinsey study, but the green is sort of subsistence level, I think we would call it in local terms. And then you've got different aspects of the growth of the consuming class. And this is this number, 37 million people between 2000 and 2030 entering the consuming class. With all of that, what that means for the growth in demand for consumer durables. For cars, for example, last year, every one car was sold in Vietnam every minute of the year. 500,000 new cars, and travel and the requirements for health and for education and leisure. These are all now moving into quite interesting investment phases. Yes, thank you, Tao. So very topical on the day when European banks are almost all down 10 or 11% in share price, and worries globally about the banking system. I mentioned we had a tough GFC in Vietnam. As you can see there, we had high rates and high inflation in 2011. And that prompted the government to enter a very, very severe process of reordering the banking sector. It's of course FX stability, price stability, monetary growth stability, banking sector stability, and the banks are now really quite tightly regulated in Vietnam. And so you can see, even for example, 2020 and 2021, we had no real distortion from COVID. We had no printing of money in Vietnam. We had no big fiscal program at all. And that's partly why inflation is still under control at the moment. And you can see that while rates last year popped up, and this was, of course, the global trend, and not least the stronger US dollar and higher US dollar rates, we've managed to keep this under control. And rates already in the last week. In fact, Vietnam's central bank was the first central bank last week to actually cut its interest rates. I wonder whether that's beginning a global trend. Thank you, Tao. And here, I think this is my last slide before handing to Tao. So we've got a set of numbers here just bearing out. I draw your attention on the right-hand column there to GDP, and then the export and the import number. This really is an extraordinarily open economy, and we've always asked ourselves, what's the risk exposure of Vietnam to shocks to the global economy? But it doesn't seem to derail the train, and so I challenge any of us to find a country that's more open to trade than that. And of course, FX reserves down the bottom, $100 billion. In some ways not much, but that's 10 times what it was 10 years ago. So I'd like to hand over to Tao now, who's going to talk a bit more about the stock market and also about Vail. And then I'll wrap up at the end just with a little more about Dragon. Over to you, Tao. Thank you very much.
Thank you, Dominic. Good afternoon, ladies and gentlemen. My name is Thảo Ngô, a member of the portfolio management team of the Vail Vietnam Enterprise Investment Limited. And if you are not familiar with the Vietnam stock market, you may be surprised to hear that the market cap of the Vietnam stock market now surpasses many emerging markets in size and liquidity. The size of the Vietnam stock market now is over 200 billion US dollar, which is bigger than other emerging markets like Philippines, Turkey, Poland, or Qatar. And before the correction, Vietnam was ahead of Malaysia. The market is rapid modernizing with new trading system were applied, which allow some product like future, warrant, and other modern trading instruments are being introduced. So, and in terms of the valuation, the market is now traded at under demanding level at a PER of 8.6 times, which is 30 or 40% discount compared to the emerging market peers. Vietnam market is satisfied most of the conditions to be included in the emerging market in terms of size and liquidity. However, there are some qualitative factors such as the foreign ownership limit remains a constraint for the Vietnam to be upgraded in the EM market. And this chart and the table below here show you how the Vietnam market has developed over the last 10 years. 10 years ago, the total market cap of Vietnam is only around 32 billion US dollar, and now it increased more than 5 times. And then now more than 1,600 listed company, and in which 40 companies listed in the main stock exchange called Ho Chi Minh Stock Exchange. And the number of companies who have the market cap above 1 billion US dollar now, around 40 companies compared to only 7 companies 10 years ago. And the liquidity, which is shown in the gray bar here, is also increased more than 12 times compared to 10 years ago, with the highest level of the liquidity per day is over 1.5 billion US dollar. There are multiple offshore ETFs tracking Vietnam, one listed in EU, one listed in London, another in New York, and 2 others in Taiwan and Thailand. We have around 8 local ETFs, and many products like index, future, cover warrant, and pension funds were just launched. And by look at the line in this chart, you could see despite there is volatility in the stock market, the market could move up and down in short term, but the progress on the liberalization of the market and the rapid development of the market surely help the uptrend of the market in the longer term. And one key factor of the Vietnam market in the recent year is the increasing participation of the local retail in the past 20 years. So this trend really took off after August 2020, when the eKYC were introduced for the new brokerage client. This leads to the explosion in the number of account opening. Before that, the local retail have to travel to the big city like Hanoi, Ho Chi Minh City to fill in the form, submit the hard copy to the broker and open account. While now with the eKYC, you just stay at home and open account in just a few hours. So yes, with the retail investor bring to the market could cause some volatility in the market. However, this is the way that the market developed. And here are the recent performance of the Vietnam index in the recent year. So despite the solid macro data in 2022, with the GDP increase more than 8%, the VN index has down more than 34% in 2022. The downtrend followed by the general decline in the global market due to the macro headwinds, and there are some domestic factors, for example, the credit restraint and regulatory tightening caused the nervous in the retail market, which have made the market a challenge year in 2022. However, thanks to the strong inflow of the foreign investor who resumed into a strong net buy of 1.4 billion US dollar in late November last year, the market has found the bottom in late November and has been recovered nearly by 12% from the bottom. And given the correction in the market last year, the valuation of the Vietnam stock market now look at very attractive level with a PE of 8.6 times, which is 1 time standard deviation below the 10 years average. And if we compare the valuation of Vietnam to other peers in the region, such as Thailand, Philippines, or Malaysia, will look more attractive. And one key reason that the foreign investor turned into net buy in last November is thanks to this attractive valuation, as well as there's a shift in the direction of the US market to emerging market after the US dollar has softening in late 2022. And in terms of the earning growth this year, the aggregated number expected to be softened at 6.2%, with most impact from the slowdown in the property market. However, there are still sectors and companies could deliver 15 to 20% earning growth this year. So we think the current market situation represents a sweet spot for the misprice in long-term fundamentals and the growth prospect. This year, 2023, will be a year that the investment performance will be driven by the stock selection and the market move from beta to the alpha. So our investment strategy is to focus on the company who deliver the long-term growth and the financial are solid and the valuation are distressed. So next, I would like to present about one of our flagship fund is VALE and our investment strategy. So VALE is the Dragon Capital flagship fund established in 1995 with the main focus on the Vietnam stock market. The investment trust is one of the biggest and the oldest Vietnam fund in operation. The funds was launched even 5 years before the stock market opened. We are one of the first participants in the Vietnam stock market. We participate actively in the privatization program of the government and also the privatization program of the private company. So with the long presence in Vietnam, we build a very strong relationship with the entrepreneur community in the country, and which some of them now become the top private company in the market nowadays. And with our good track record and the size of VALE, we are one of the first names that the entrepreneur in Vietnam want to have as an anchor investor in their pre-IPO plan or capital raising. VALE were listed in London Stock Exchange in July 2016 and a member of the FTSE 2050. The fund size now £1.3 billion, and our annual net return in pound is 11.5% since the Vietnam stock market inception in the year 2000, and this is net of fee. Our investment universe is mainly in the listed and the pre-listed equity, so there is a high degree of the transparency to the NAV. And this is our investment process. Our objective in managing VALE is to deliver the sustainable long-term growth for our investor. So to achieve this return, we apply a rigorous investment process run by a team of 3 people together with 12 in-house analysts to identify the best sector who best position in the Vietnam macro development. And then we identify the company display the key factor, including the ESG screening, corporate governance, and the earning growth. And here is the graph show our investment process. It shows the 5 steps how we select from more than 1,600 listed company to choose only around 20 or 13 holdings in our portfolio. So the step 1, we initially screening for the investability based on the size, flows, ESG, and liquidity. In the step 2, we use our X factor, our internal research model, to identify the best company based on different angles, like not only value for growth, but also in terms of the stock price catalyst, flow, and liquidity. In step 5 is the portfolio construction. Based on our mandate and risk management system, we will decide the allocation for the stock that we would like to have in our portfolio. And here is the example of the company analysis which present in our IRIS system. The IRIS stands for our internal research and intelligence system. We can see all of the important information relating to the company, like the latest recommendation from our analysts, and also the financial summary in the last 5 years. And more importantly, you can see here we have a frequent discussion and update with the company management. For example, like this company, the FPT, the top IT service company in Vietnam, we talk to the company in almost every month to discuss and update about the business performance. So with the advantage of having the investment team in Vietnam and 18 in-house analysts, we build a frequent contact with our investee and other company. And VAL has a good track record of outperforming the VN index. This graph here shows our performance in the last 10 years. We only underperformed the index in 2 years, the year 2019 and the year 2022, while the rest of 8 years we outperformed the local market in every other years. And if we compare the VAL performance with other indexes who track the Vietnam stock market, VAL outperformed on the MSCI Emerging Market, MSCI Frontier, and other ETF who tracking Vietnam. So talking about our investment strategy, as Dominic mentioned above about the key growth driver of the Vietnam story, there are 2 key themes that we follow in our investment strategy is the urbanization and the robust domestic consumption driven by the middle class formation. So we have overweight in some sectors that could capture these 2 themes well. For the urbanization, the residential real estate and the construction material like steel will benefit from the urbanization and the infrastructure development. The industrial part has grown well thanks to the strong FDI inflow to Vietnam, and the banking sector provided financing for these sectors. For consumption, we are overweight in the retail, the technology, while we have some exposure in the food and beverage, given its high valuation and the growth prospect. Another thing I would like to highlight in the VAL portfolio is the 3 purple here. So as I mentioned in the stock market section, Vietnam has a cap on the foreign ownership limit at 49% for the normal companies and 30% for the banks. So in VAL, we have a meaningful position in the full foreign ownership limit stock at 45.5% of the total AUM. So to build this position, it took us years with the support from our deal power advantage. The FOL stock now is being traded at 7% premium compared to the market price, and it's not quite easy to accumulate the size that you want in a short period of time. So if we reflect that premium into our NAV, it would not add another 2% into the fund performance. And here is the VAL portfolio summary. We have a quite concentrated portfolio with 28 names, and the top 10 here already occupy 67% of the portfolio. So the team with the 3 persons work really closely with our in-house analysts to decide which is the high conviction investment in our portfolio. For example, our top holding, Asia Commercial Bank, the best asset quality among the private banks, have proven through the years, and we have around 13.5% in our portfolio compared to the index rate of only 2%. So this high conviction brings the active share ratio in VAL to 58%. In terms of the valuation, with the value for growth approach, VAL normally provide the higher earning growth than the market, and we trade at a cheaper valuation. However, for this year, given the high interest rate and the high inflation, the investment opportunity would come from the company with the strong fundamental that could survive through this difficulty period. So the earning of them could be a little bit lower and traded at higher valuation. So when you look at this column, the first year that we invest into our investee, normally the average holding period of the top 10 years is over 10 years. And for ACB here, the top holding, we have invested in the bank for nearly 27 years when the bank just started to list in the stock market. And this is the slide summary, the long-term performance of our top holding. So although the 1 year performance doesn't look good due to the market volatility, when you look at the long-term performance of both cumulative and annualized return, in some period when the Vietnam index did not perform well, our top holding still delivers superior return compared to the market. And for this year, 2023, we think this is the years for the stock selection. And these are the stocks that we believe could deliver excellent performance in medium and long term. So this is the end of my part. And I would like to transfer to Dominic to talk about Dragon Capital.
Thank you, Tao, very much. So just to wrap up, just 2 final slides on Dragon. It's important to know, it's important for us to introduce ourselves properly. You can see we were founded in 1994, myself and a couple of other colleagues, Vietnamese colleagues. We are a fund manager. That's all we do. We've been doing that since then. In fact, Vietnam didn't have a stock market until 2000. So for the first few years, we were learning, and you know, that was a valuable time learning about the culture and how things work there. But it's been a good journey. We're now about $5 billion in assets under management. As you can see, Vail, as Tao mentioned, is our flagship. It's the longest track record we have. Our clients are overwhelmingly international clients. At the bigger end, it's sovereigns and sovereign wealth funds and families and endowments, but we have wealth management platforms and, of course, a lot of individual investors who are most extremely welcome. We really only specialize in the capital markets, so that's principally the equity markets, but also a little bit into the debt markets. We don't do real estate or infrastructure or private equity. The most important point about Dragon, I think, is that we're owned by ourselves. Independence is an absolutely critical part of our philosophy. So we make our own decisions on the ground in Vietnam, and that's a very, very core part of our DNA. Thank you, Tao. Last slide. And there you can see the peer group. It's the chart that every fund manager loves to show. This it shows us in the right quadrant. Our strap line is after the Vietnamese government. We're the largest investor in the Vietnamese stock market. That we don't use very often, of course, but generally that's what we expect and what we hope and what we struggle and what we will work very hard to do in the next 30 years. Thank you very much for listening. I think over to Thomas now, and Tao, you can flip that couple of slides forward, maybe next one.
Yeah. Fantastic. Thanks to both of you. We have quite a few questions already having come in. If you're in the audience, we've got 10 minutes or so please do put your questions and we'll try and get through all of them. Perhaps we could start with the foreign ownership issue as something that you touched on quite recently. So there's a question around, I guess, how does that affect your investment, and do you expect these limits to to be to change over time and for more foreign ownership to come in?
Yeah, that's a very good question and shows some considerable knowledge of Vietnam. All Asian countries have a history of foreign ownership limits, from Japan through to Thailand, Malaysia. So Vietnam's not an exception. Most countries work through this over years as their domestic financial systems develop maturity, and Vietnam is indeed going the same way. The issue of access by foreign investors is what has stopped Vietnam from becoming formally an emerging market, the point that Tao was referring to. And the reason for this is essentially perception that domestic investors have better access than foreign investors. You know, at one end, it's the issue of English language annual reports, for example. More substantially, it's limits on the ownership of companies and also the need to pre-position. Specifically on foreign ownership limits, it does affect our investment strategy. It means that, you know, we've got some very long-term holdings in core businesses. Tao was talking about that. ACB, for example, is an investment we made in 1996, and we're still hanging on to it. But we also trade, and I think another point Tao made is, you know, we're on the ground, and we are an investor of substance, and so we do communicate deeply and regularly, and with all market participants, and we do have the ability to trade. So I would say it influences our style, but not our substance as an investor. And I think to wrap that question up, you know, foreign ownership limits will be with Vietnam for a while. You know, we all know it's a key metric for the securities regulator to be upgraded to emerging market status. So that's, you know, that's clearly the objective, but it might take us a year or two to get there.
Sorry, I lost the mute button. You say only a year or two. So is there other plans afoot to try and achieve emerging market status then? Is that a goal?
It's the key KPI performance metric for the new chairwoman of Vietnam's securities regulator, who I met a month ago. She's only been there 2 months now. And so all people, interested parties, and we are one of them, are working hard to deal with this. So the English language reporting thing is sort of out of the way. The foreign ownership limit thing, it's become less of an issue now, because there have been some workarounds where the regulator will permit structures to be started so long as they're managed domestically, which funnel foreign capital into the local shares of companies with limits that are full. Most particularly an ETF called Diamond, which actually we started some years ago, which buys local shares. And so the premium and the volume, the premium has reduced and the volume has increased. So the problem has become less of a headache. But the answer is non-voting depository receipts, which are used with great success in Thailand and Malaysia, and Vietnam has set its eyes on achieving that. The pre-positioning issue is a function of you know, risk management, but in the infrastructure of the exchange, and that is being addressed this year through the incorporation of a new trading system in the Ho Chi Minh Exchange, and importantly, a central clearing party for the first time. So you can definitely, we can see the issues being worked through.
And sticking with the general, before we drill down a bit, there's a question around political risk. So, you know, I suppose putting that in context, you know, China, we've seen issues arising in certain sectors as the Communist Party has also changed. How does political risk affect what you do, and is it something that you need to be aware of?
So the term compare and contrast between Vietnam and China is an apposite one. Obviously, they're very different. China is huge, vast, globally ambitious and significant. Vietnam is one country of 100 million people. But there are similarities in terms of the way that they've evolved. Also, of course, in terms of culture and history and right now political structure. Both countries are run by a Communist Party. But Vietnam only really became the modern independent Vietnam in 1975. So 2 years from now, 50 years of nationhood is being celebrated. And really modern economic Vietnam is only 30 years old. And the path to modernity was painful for Vietnam. And there's a very, very strong inclination in political philosophy, in practice, in culture, in community, in society, to maintain a stable and unified country. And we see that very strongly in the political structure. So shocks are generally avoided in pursuit of stability. Now, there have been some events. Tao alluded to this. There's been a regulatory shakedown. There's also been some recent political changes. The president of Vietnam was retired early over Chinese New Year this year, and I think I alluded earlier to the fact that the GFC was painful for Vietnam, and so from 2014, the Communist Party has been ruthlessly dedicated to re-establishing stability, good practice, and accountability throughout the economy in all aspects. And one particular angle has been an anti-corruption campaign, which has been really going on for 10 years now, and continues to, shine the spotlight on issues. So broadly speaking, last year, you can say in the markets, we had some issues in relation to listed companies and private companies, insider trading, misinformation in prospectuses, and poor conduct in the corporate debt market. So these were, if you talk about, these were market abuses that were being tackled. Then we had a second set of issues, president and a couple of deputy prime ministers. That was different. That was to assign accountability for abuses or malpractice during Vietnam experience with COVID. First with the artificial increase in prices of test kits. Secondly, in irregularities in repatriation flights. Both issues that go very much to the heart and concerns of the Vietnamese population. So I think what we see is that there's a political culture in Vietnam which is dedicated to stability. It's dedicated to progress and economic openness, but it's also firming up quite seriously in terms of malpractice and corruption. And so there's a great deal of response. I can speak for my own family, and Tao can speak for her family, but the response on the street is generally rather positive. It's less positive. It has a downside in the sense that it makes public officials a little bit more circumspect in terms of pushing ahead with risky decision making. But that's a balance. I hope that answers the question, Thomas.
Thanks. I'm going to, in the interest of time, I'm going to wrap these two questions together. So apologies for those asking them. So first one is a broad question on ESG investing. So is that ESG figure in how you invest? And secondly, more specific on energy. So Vietnam is currently dependent on coal, largely from China. Are there any plans to minimize this dependency, and are there any plans to switch to renewables?
Tao, why don't you tackle that? You've got the slide in front, haven't you?
Hi, Thomas. I will take the question on the ESG. So actually, we do have we manage the ESG risk in our investment process. So this is the process that of ESG commitment we apply in our investment process. So with the support of our IFC, we establish our internal ESG management system. And we have the exclusion list of the sectors that we are not allowed to invest into. For example, like tobacco, weapon trading, and some sector that have high ESG risks. And we also have a detail of the screening questionnaires and our internal scoring system for the ESG, that which allow us to evaluate our existing investee and potential investment opportunity. So we actively engage in procedure if there is a ESG incident happen to our investee. And actually in the last 2 years, we have been also upgrading our ESG management system. So we have like a climate change risk report has been since last year. We have a separated section of the climate change in our annual report, and we engage with a third party, Intensal, to do a climate change analysis for us. And so in general, we are quite active in applying the ESG commitment in our investment process.
It's an interesting question. If I could come in there, you know, to what extent are ESG principles relevant in investing in frontier and emerging markets? And I would say they're very relevant. The most significant risk that we can identify over the last 25 years of investing is governance risk. And so everyone in Dragon is a governance warrior. And that's first and foremost of the ESG risks. But Tao also mentioned, and I'd like to emphasize that we're committed to the TCFD process of climate disclosures and have been doing that now for 3 years. In fact, Vail does have full TCFD disclosures in the annual report, and we've tackled looking forwards. We've tackled the area of biodiversity, and we're looking at trying to start a biodiversity credit scheme with the Vietnamese government. So it's very much a function of engagement. On the energy question, yes, we do have coal plants, and we do import coal from China and also from Australia. But non-hydrocarbon is over 50% of Vietnam's energy. So that we've got a large hydro sector. And in 2019 and 2020, 2018, 2019, 2020, the country was extraordinarily successful with a solar FIT, feed-in tariff scheme, which got 100 solar developers, Vietnamese, to contribute and install 20% of Vietnam's installed energy as as solar. So there's which I think surprised everybody, that so much happens so quickly. And of course, Vietnam's Prime Minister committed to net zero in 2050 at COP26 in Glasgow, and Vietnam is now the third country to sign the JETP, Just Energy Transition Partnership, after Indonesia and South Africa. So quite a lot going on as Vietnam navigates its path and its commitment to decarbonising the economy. Thank you, Thomas.
We had a question on unlisteds or pre-listeds. I think you touched on how much is in the portfolio at the moment, but the question around how they're valued and if there are any risks associated with that.
Yeah, I will take this question. So the majority, 98% of the Vail portfolio is in the listed area. We only have around 2% in the pre-listed company who have also a clear plan to be listed in the next 18 months. So in terms of the valuation, we fully mark to market, and that's why I say that we have a high level of transparency in terms of our NAV valuation.
Great. Well, I think in the interest of time, I'm going to draw this to a close. There were a couple of questions there that I think we did answer as the presentation went on. But if you're in the audience and and you think your question wasn't fully answered or something else comes to mind, please do send that question through and we'll pass that on to the manager. But thanks very much, Dominic, and thanks, Tao, for your presentation. Very interesting, and I hope you have a great afternoon. Thank you to the audience. Goodbye.
Thank you all very much. Thank you, Thomas. Great pleasure.
Yeah, thanks, Thomas. Bye-bye.
Bye-bye.